Hello, and welcome back to the Foreclosure Deals Coach podcast. I am your host and Foreclosure Deals Coach, Donny. Thank you so much for tuning in. Happy New Year. Welcome back to the show. Some quick housekeeping. Listen, if you want to become part of the Foreclosure Deals Coach conversation, you need to go no further than join up with the Foreclosure Deals Coach Facebook group. We're talking in there about finding deals, figuring deals, funding deals, fixing deals, and flipping deals right there in the group. Get your start there. You're going to learn a lot about what's going on, get some insider information, and learn from a bunch of people who are in the same spot you are trying to get started in their investment career. Let's get to it. As always, our first topic of the week is going to be our mindset. And the mindset today, check this out, was from late First Lady Eleanor Roosevelt, who said, do one thing every day that scares you. And listen, I really took that to heart because I got to tell you, many years ago when I was getting started in the real estate investment industry, and if you go back to the very first show of the podcast here, it goes into more details about this story, but I was sitting in my cubicle and I was doing the office thing, right? I was working in an IT support position for a software company, and I'll be honest with you, I hated it. Okay. So one of the things I remember doing that scared me was I was having a conversation with a fellow IT guy there in the office, and we're working on something. And he said up to me, you know what I've always wanted to do? I said, no, Greg, I don't know what you always wanted to do. What's that? Flip a house. And from that moment forward, I realized that was something I wanted to do too. And I started working down the road of finding my first house to flip. Now, the rest of the story is really well laid out in that pilot episode that we shot. But in the end, I was terrified to take that first step. And I got to tell you, a lot of people come to me as coaching clients and they are terrified to take that first step. Maybe the actual idea of just having a conversation frightens you right now. Listen, my advice to you right now is do one thing each and every single day that scares you just a little bit, and that way you are always pushing your boundaries. I promise I don't bite, but if you'll join the group, hop in there and schedule the time to talk about whether coaching to do your first fix and flip deal, your first foreclosure deal. If now is the time, I would love to have that conversation with you and help you to find, figure, fund, fix, and flip your first deal. Like Eleanor Roosevelt says, it's so important to do something each and every single day that scares you just a little bit. And I got to tell you, we can take the fear out of this. I've got clients who walk in knowing absolutely nothing about the foreclosure investment industry and walk out doing their first deal with a minimum profit of 25 grand. And in a lot of cases, way more than that. So don't let it scare you. Let's get started. Kudos to Eleanor Roosevelt for mentioning that important thing to deal with. All right, let's move on from there. We have our news article of the week. Check this out. We have the Blackstone, well, here we go. University of California, which you think of as a school, right? Because they pumped $4 billion. That's with a B. $4 billion into the Blackstone REIT. Now, REIT stands for those of you who don't know, the Real Estate Investment Trust, okay? So recently, as you may have noticed, the real estate market slowed down. We did a show many, many months back that talked about that Blackstone had raised over $50 billion. Well, when the market slowed down, some of the investors took their money back out of that REIT, as is the nature of the market. Things go up, people pump money in. Things go down, people pull money back out, okay? Well, in a cast of confidence here, a university, okay, pumped another $4 billion towards the Blackstone REIT. Now, this is important, okay, because it's a sign of investor confidence in the real estate market. Blackstone is a hedge fund. Their essence is to make money on money, okay? So this $4 billion is designed to capitalize on buying the under market assets that pretty much everybody in the know knows is going to happen next, okay? So the question you got to be asking yourself right now is, what are you waiting for? If you're seeing these major investors make major moves in the marketplace, are you going to wait until all the money's been sucked out of the market and you're going, man, I wish I had gotten involved with that? Or are you going to make the smart move and start investing in real estate right now? The opportunities are not near as good as they're going to get, but I can tell you, as a guy who looks at the market each and every single day, we're seeing some huge opportunities in the real estate market right now, and those opportunities are only going to get better as time progresses. Blackstone realizes it. The University of California, who just pledged $4 billion to back that play. And I'm telling you, you as an individual investor have never had more opportunities in the real estate investment space than you do right at this moment, and you will have in the next 3 to 6 months. Why? Rates went up. Demand went down, and a lot of people bought their properties at the top of the market in the last 2 years, if not above market. If you go back to shows from months ago, we were talking about how people were paying 40, 50, 60 grand over asking price just to get a property done in that real estate market. Well, those people are going to have to sell for a wealth of reasons. There's job transfer, there's divorce, there's loss of a job, there's death in the family. Things happen all the time that force people to sell homes. We're not looking for the people who just want to sell. Okay. Normal retail sellers are not what this show is about. The normal retail sellers have to get retail price. They usually have plenty of time to sell. They're usually not that motivated. But distressed sellers, like people who have to get out right now for whatever reason, and or foreclosures that are going to banks who are taking those properties back as collateral when people can no longer pay their mortgage. Those are the opportunities that you and I are looking for as real estate investors in this marketplace. Blackstone's seeing it. They're getting funds together right now. And if you're a smart investor in the marketplace, you're going to want to start looking at doing deals right now in your local market. So I'm going to post this article into the Facebook group and on the page, as we always do. Take a look, but really get a feel, because there's a bunch of investors who are now putting money into these big REITs because they intend to capitalize on the future market. Now, you could do that too if you're a major investor player, right? But when you put your money into a REIT, what you're basically saying is you're allowing that person, like a mutual fund manager, to make money on your money. They're going to give you a great return. In this case, the REIT that we're referring to from Blackstone returned 9.3%, which, I'm not going to kid you, by most market standards, is pretty awesome. Okay, it's a good return on investment. But what if you could invest your own money into your own deals and see a consistent return on one deal of 20, 30%? And what if you could do that 3-4 times a year, because instead of having somebody manage your funds for you, you're taking charge of your financial future and doing your own investing into the market. Now you get the bulk of the return instead of putting it into a REIT. Okay, check out the article. But the real takeaway I want you to get is, by investing by yourself, you have a much higher probability of making way more money than putting this money into a REIT or a mutual fund and hoping that the market gives you part of the returns that it gets from that. Okay, great article. I highly encourage you to check that out. Let's do our deal analysis of the week, which we do each and every single week. We're going to hop into Privy and try to find us a deal right there in the market. And I got this defaulted to Melbourne, Florida, because I've been looking a lot of that Florida marketplace. Let's hop back into Colorado Springs, Colorado for just a minute. That's my hometown. That's where I'm from. And I'm going to let you know that I've already got a deal scheduled here. So we're going to actually go look at a property that one of my clients just got under contract here at an incredible deal from a wholesale deal that I helped to put together. So we have a $239,000 purchase price on 609 Winnipeg Drive. Okay. Now, the key is that Privy serves two functions for you here. Number one, you can find great deals in the local marketplace, which means you can hop online, put in your city, anywhere in the country, well, almost anywhere. Privy's in roughly 80-85% of the markets here in the US, and they're adding cities constantly. Okay. So right now you've got a bunch of markets. You can hop in there and go find deals right there in your local marketplace. Then you have to do your analysis. That's the figure stage. Well, we hop down here to comparables, and remember that Privy is an artificial intelligence. It doesn't have all the data all the time. So I knew this was going to be a problem already. Normally here we have the option to find sold and other comparable sales right here. But in this case, Privy is only showing us the rental comps in the neighborhood. Well, that's not going to do us any good. We're trying to determine if we're going to buy this property. So what do you do as an investor if you've already signed up for Privy, which if you haven't, please use my affiliate link, bit.ly/FDC Privy to sign up. But if you can't find a deal in Privy, what should you do? Well, today's tactic is going to be going over getting your access to the MLS without being a licensed real estate agent. Now, a lot of my clients are in fact real estate agents. They've got access to the MLS already. But if you don't want to become a real estate agent, and I'll be frank with you, one of the best things I did for my investing career was stopping being a real estate agent. It's kind of like golden handcuffs. There's a lot of restrictions you have as a licensed real estate agent that makes it less than conducive to becoming a real estate investor. So if you don't have access to it and you don't have your comps, where can you go to get comparable sales on this? Because we can't just buy a property willy-nilly. Now, there's a term I don't get to use very often, excuse me. So you have to do your data analysis. You've got to get through the figure stage before you can determine whether you're going to buy a property or not. So if you don't have access to, if Privy's not giving you what you need, the next step would be getting a MLS access as a unlicensed assistant. Let me say that again. You can get MLS access as an unlicensed assistant, but to do so, you've got to partner with a local real estate agent in your market and ask for access. Now, listen, you're not breaking any laws. You're not thwarting any rules here. A lot of real estate agents have multiple people working for them who help them to enter their listings in the database, do some research on comp analysis, find properties, all the same stuff that we're doing. So if you reach out to a local agent and say, I'd like to get unlicensed MLS access, and you've got a good relationship with that person, and you intend to do business with that individual, listen, this has got to be mutually beneficial, okay? If you're going to ask for unlicensed MLS access, you're also going to want to make sure that when you're going to list your property, if you're not going to use my flat fee MLS service that I offer, if you're going to put an agent on there, and your market really depends on whether or not that makes financial sense, okay? But if you're going to list the property, logically, you want to use that agent to list the property because they're helping you out with this access. Don't be greedy here, okay? Your goal is to form relationships that are mutually beneficial, and in doing so, you're going to work with that agent for years to come, providing them with sources of business while you're getting access to deals and MLS access. So in this case, I have that set up right now with one of my agent buddies, since I'm not an agent anymore, and we're going to hop in real quick since Privy didn't help us out here. And this happens, I'd say maybe 1 in 10 times. It's not super often where I don't manage to get MLS access. I don't manage to get the comps that I need from Privy, But if we hop in here, you will see I've got the MLS, and I'm going to use all the same tools that I use when I'm searching for a property in Privy. The MLS is going to look a little bit different, but what we want to see is properties that are roughly a mile radius around our subject property. Once again, we're at 609 Winnipeg Drive. Okay, so we're bringing up 609 Winnipeg Drive. We want to see active, pending, and sold properties. It defaults to 180 days back in the marketplace. But right now, we know that if we go back 6 months, we're dealing now with June and July and August comps, which is when the big rate increases were just starting to start. And as a result, those comps are not accurate yet, okay? So we want to find comps that are about 90 days old. You can usually use the last quarter's worth of data and then extrapolate a little bit on which way the market is trending. Is it trending upwards or downwards to determine where your market is going? Now, Privy simplifies this a great deal. I'm not going to kid you. When it does run the comps, it shows you the dates, it shows you the days on market, and it is much faster than the MLS process, which is why I prefer to use Privy, and I recommend it to each and every single one of my clients because it will help you to get comps done a lot faster and a lot simpler. But again, we're in a situation where we can't find any comps because Privy doesn't have the data, so we got to pivot a little bit here. So we know that the property on Winnipeg is 1,400 square feet, so I want to bring up stuff that's as low as 1,000 square feet and as much as 1,500 square feet. We don't want to see properties that are much bigger than that, and we don't want to see properties that are much smaller than that because they're going to skew our data. Okay. We also want to see stuff that's about a mile away. Remember, a house is worth what everybody else in the neighborhood is willing to pay for a similar house in that area. Okay. So that leaves us with 11 matches, which is not a ton of data, but it should give us an idea on what this property is worth. So we paid with assignment fees, where actually you saw 240, but with the wholesale assignment fee, the buyer's paying 255 for this property, okay? Our job is to determine if this is a good deal for the client. Well, first thing we got to know is, what is the property going to sell for in the retail market? That's why we're doing this deal analysis section. We bring up the comps here, and you can see the property was listed here, 609 Winnipeg Drive, listed for 239, 1,400 square feet, 4 bedrooms, 2 bath, 1 car garage. We've got one active comp that we can't ultimately use because it hasn't sold yet. Okay, it gives you an idea what your competition is trying to get for it, but what you're really looking for is what's sold. Privy also gives you the active comps, but obviously we can get it from the MLS right now. This is a very similar house. It's a 3-bedroom, 2 bath, 1,400 square feet. Ours is a 4-bedroom, 2 bath, but they're listed at 365, and it hasn't moved yet. Right? Let's check out the inside. Pretty carte blanche for my typical remodel. They're using the same paint colors, the gray and white that we use, nice granite countertops, nice stainless steel appliance package. This is pretty much in line with what I would expect my property to look like when it's properly remodeled. And when you get into the coaching program, we go into great detail about exactly how to remodel the property to what the market wants to sell quickly. So this is about right. However, looking at the property here, it looks great, but it's been, look at this, 97 days on market, and it hasn't sold yet. So the market doesn't lie. It is telling us right now, unequivocally, that this is too high of a price for this property to sell. Okay, now that's going to change over time. The market's constantly in a state of shift, right? But for this moment, the market's saying after 97 days on market, this price is too high. So the smart play is to reduce the price. And since right now we're doing data analysis, the smarter play is to understand that 365 is not going to sell a 3-bedroom, 2 bath, 1 car garage house in this neighborhood for 365. So we don't want to use that as a comp. What we do want to look at is what's sold, because the sold comps tell us ultimately what the market is willing to pay for these properties. And once you know that, guys, you're taking the guessing game out of this. You don't want to speculate on this. This is not stock trading where you're hoping that the stock is going to go to a certain value at some point in the future. When you buy real estate, we're taking the speculation out of it. You make your money when you buy, and you realize that gain when you sell the property later on. So in this case, we're looking at what sold in the neighborhood and how much it went for. And we also want to see what condition it was in. So being the opportunist that I am, we're going to look at the most expensive one that sold. And it's a similar square footage, but we don't want to use this comp. And why? Check out this 4-car detached garage, okay? That we don't have a 4-car detached garage. We've got a 1-car garage on our property. So that's definitely skewing the numbers. How much? Well, that depends on what the market value of a 4-car garage is in your market. It does range, but I would say 40, 50 grand. I'd be confident saying that would take off of what this property would be worth based on the fact that this one had a 4-car garage. But this one also had a 2-bedroom, 1 bath, or a 4-bedroom, 2 bath, similar in square footage, but it did take a long time to sell. So for all these reasons, this is not a super valid comp. We got to do a lot of adjustment to that. We go to this next one on Gomer Avenue. This is smaller. It also has a larger garage. It sold in a good amount of time, 20 to 21 days. We're now looking in the past. We were measuring our time on market by hours, right? Because things were selling so fast. Now, a good comp should have sold in 30 days or less, give or take. Okay, so here we are 20 to 21 days in. It's sold with 1,100 square feet, 21 days in for 374. We got to adjust a little bit for the fact that we are a 1-car garage versus this 3-car attached detached situation. I want to give that a 25,000 valuation, give or take, lowering that down about 350. And then we want to see the inside, see how we compare to the inside. And again, nice paint colors, pretty much a flip. Good looking property. They didn't do much with the cabinets, so the old style oak cabinets, but they did a lot of the remodel. Nice fresh paint, nice fresh flooring. This is a pretty solid remodeled comp. The only big variable on this is got that 2-car detached garage, which we cannot use because we don't have that, right? So one more comp for good measure here. We usually like to find 3 to 4. Okay, to make sure we're not lying to ourselves about the comp. This one's going to be tough to use because of the year built. Our property was built in like 1972, 1973. This was built in 04. So I'm going to reject that one right out of the gate because it's not a valid comp. I think we're gonna have the same problem here, 2019, and we could have filtered on this when we were doing our search, so we didn't have to go through this data this way, okay? I didn't put in that many filters. This one in Prospect Park, look at this, 1,400 square feet. It's got a carport and a one-car garage, sold in 3 days, which is an indication that it could have gone for a little bit more, right? Inside, they did 50 photos. We're not gonna look at all of them, but it's still got the terrible green color. There's some wood desire. This is owner-occupied retail, so not as nice as ours is going to be in remodeled condition, and this one went for $340. Okay, so in the end, if I'm looking at all of the comps, hopping back out here, I'm going for somewhere as low as $340, as high as like $374. I believe we're going to be able to sell this property for $350. Now, the good news on this particular property is that it's in great shape. Right? So it's, we don't have to do a ton of work to this property to get the value out of it that we're looking for. And as such, I'm really fond of this property. I think it's going to make a great buy for our customers on this deal. And I'm highly recommending that my client pick this one up because it is such a great deal for them. Okay. And that's the key. You're not out there alone trying to do your first flip. The idea behind the Foreclosure Deals Coach program is that A, I'm going to take you from a state of inaction to a state of action. And B, when you get nervous because you're not worried if this is the right move for you, I'm going to help to make sure that the analysis is solid, that the funding is solid, that you have all the pieces that you need to result in a successful flip. We're taking all the guesswork out of doing your first deal. After over 300 deals, I can assure you there's very little I haven't seen. And this is not market dependent. Anywhere in the U.S., I can help you to find your deal and make sure that you get a deal done, because that's the whole idea of making this investment, is to help you get that done. And now we know that we can run comps in the MLS. If you don't have MLS access and Privy is not working, we also have the option to do this through Redfin or Zillow. You can run some comps there, but I do prefer to use professional valuation tools like Privy is my preference, or the MLS, whatever possible. Okay, so that's what's happening in the marketplace right now. Deals are happening. I know the market slowed down a bit, but I don't want to get you in the mindset that deals are not currently happening in the market, because they are happening each and every single day. The key is you have to be able to act quickly. So you want to get started now. You saw that Blackstone is mounting for war here. They're raising money because they know there's going to be a ton of great opportunities out there for a large investment firm, and there's going to be an equal amount of investment opportunities out there for people just like you who want to do their first flip deal right there in their local market. And I want to help you to get through that and walk you through the process so it's easier, much safer, and just gets you through it. Get started. Jump into the group. We have our Facebook group is a Foreclosure Deals Coach group. The link will be posted in here to the show notes. Join the group. Become part of the conversation. Let's talk about getting you started doing your first deal in a local market. Take all the guesswork out of it. Do the analysis and help you to make at least $25,000 doing your first foreclosure flip. And that really is our show for today, guys. I appreciate you tuning in, but please take action. Head on out to the Facebook group, download the ebook. All the links to those things will be available right here in the show notes and on the YouTube video links. And if you haven't already, subscribe to the YouTube channel. I'm going to keep coming at you with live foreclosure data and the best information available to get your career started in foreclosure investing. With that, this is Donny Corum, your Foreclosure Deals Coach. Thank you yet again for tuning in and reminding you now and always, don't buy a house, buy a deal.